Hi guys, Amber Coleman here with Guild Mortgage. Wanted to bring you a fun little tool when you're buying a house. So there's kind of a lost art when you're looking at buying a house, or there's a lost thing to talk about. So I'm going to run through some numbers with you. We're going to go through what's called an amortization schedule and figure out how to work your life out moving forward. Okay, so I'm going to pull up the screen here, and then this is a worksheet where you can put in what your loan amount is. So I'm just going to guess the loan amount's around $350,000, and then you can put in what your annual interest rate is. I'm just going to guess and put in 6.5%. Remember, that's not today's rate. We're just putting in random rates down here. And then the period of loan in years, so we're going to put in 30 years, and then 12 that you pay 12 months number of payments per year. We're going to put in the start date, so just assuming that you're just barely buying this house and that you're going to start making your payment 10/1/2025. Okay, so then it pulls up all these fun numbers, and some people are going to be like, that is a lot. But I'm going to break it down for you pretty simply, and then I'm going to show you something that's really cool to look at when you're looking at these amortization schedules. So what this shows is if you had that loan amount and if you had that interest rate, your principal and interest payments right here would be $2,212.24. Now, what you don't ever hear about right now is that every penny that you're paying towards your house actually goes towards something. Okay, so you have your principal. So here it shows your total payment, and then you have your principal amount. So this is the amount that you're paying down on your mortgage. So every month that goes by, see how the balance goes lower and lower? So hit 10 years. This is why they say when you're doing a long-term benefit of home ownership, most people that have had a house for 10 years become winners after that. Okay, so it's a long-term benefit. So that principal brings your balance down lower and lower each month, and the interest that you're paying is tax deductible. So at the end of the year from the mortgage company, you're going to receive a notice saying here's how much you paid in interest that you bring to your accountant when you're doing your taxes. So all of this works toward you. Now here's the cool thing. So when you're looking at buying a house, it's not always going to be, you're going to look at the here and now, right, to make sure you can afford the payment. But without even trying, you're working towards something on your mortgage. And let me show you how. Okay, so like every month that goes by, you're paying down on that mortgage, and then you're getting a tax write-off right here. So then if you say, okay, I want to be able to, like, let's say you're getting close to your 40s, right? And you're not sure if you want to hustle like this and work as hard as you work for the next 30 years to pay off this house. But the best way to retire is actually to have a house either paid off or close to paid off. So to work up a game plan on that, let's just say you paid on top of your regular mortgage payment, you paid an extra $100 on it. That full $100 is going to go towards this principal. So your regular principal that you're paying plus the extra $100. So that's going to bring the number of years that you have to pay this off. It went from 30 years at 360 months to pay it off down to 318 months just by paying an extra $100 every month on that loan. Okay, so let's just try to play with it a little bit more. Let's say you wanted to pay it off faster than that. Like with things being more expensive right now, I'm always telling people, right now we have to have more of a game plan. Before we used to be able to kind of flow by the seat of our pants. Now we got to walk into a game plan and be able to figure out our future lives to be able to make sure it benefits us, right? So let's just say we paid $500 extra per month. Look at what that does to that principal amount right there. So then you're paying down on your house to the point where you're going to have it paid off in 223 months. So you can get real fun with this. You can decide like what you want to pay. Let's get crazy and say you're going to pay $1,000 extra per month. Look at that. You'd have it paid in 166 months from now. You can really plan your future and really plan what you're going to do compared to renting where you don't really have a future. You're always going to be paying higher rising rents and it's not working towards anything at all. So these are real fun to play with, but it's a lot more fun when you can put in your own numbers for your own house or your own dream house into these kind of worksheets. So what I'm going to do is I'm going to put this worksheet on my website. I'll put the link below. And then if you want to if you want to look at how to get qualified so that you can work up your future and figure out the best way to make your life work, which I know has to do with home ownership, right? But I want you to be able to see that for yourself too. You can apply online on my website as well, or you can put your information. You can reach out to me by email or phone. I'm going to put all that on the screen. I look forward to hearing from you.